In this section, we're going to go very quickly over some things to watch for when you go through the financial statements. Be mindful that often you'll see above in parentheses what, in terms of dollar figure, these numbers represent. In this case, you can see it's in the millions except for per share amounts. And per share amounts are simply the amount of a classification divided by the number of shares outstanding. Diluted shares is basically all the shares outstanding plus all the possible outstanding shares, such as shares that can be issued as stock options as rewards to employees. Say, for example, being able to buy a share of a company stock below the market value and being able to sell it, of course, at the market value, at a profit. Also, when you see amounts in parentheses, that means a reduction in amount. So here we have retirement benefits adjustment. This means there is an adjustment of a lessening of $2 billion and 536 million. Numbers not in parentheses are increases. Also, when you're looking at a balance sheet, remember this is not for a period of time. This is a snapshot for a particular period. And what you want to look for first off is whether its assets are enough to pay off its liabilities, to see if its current assets are more than its short-term liabilities. Because if it doesn't have enough money to pay off its short-term debt, it is going to have to borrow the money or fold. So that's something you want to take into consideration. Also, with cash flow, you want to make sure that it is cash flow positive for operating activities. And if it is not, research why that is the case. Because if it's not positive for operating activities, that means it is using up cash. And if you use up cash, there's a limited supply. It can only go downhill from there. You will have to borrow money or fold. Another thing you want to make sure is you do not rely too much on per share data. One, a company can borrow money just to buy back shares to make it look like there is more earnings per share. So you have to do research on everything. Make sure it is not going in debt to buy back shares so that it can make its earnings per share numbers look good. You also want to make sure it is not cutting back on some valuable costs that may increase future revenue just for the short-term cut in costs today. For example, research and development. You may get a nice net income boost simply because you cut out research development. But what that means is in the future you're going to probably have less revenue because you are not investing in research for new products. So you want to make sure that you research everything and look at the notes for the financial statements. You may also want to know, what does consolidated mean? Well, that basically means it's the entire company. For every business, say if they're in the garment business, if they're in the medical supply business, this is all included. They have added it all together. And we go over in depth about each of these reports. This is just some things to look at and observe first to get a quick idea of how the company is doing.